If you're shopping for a home, then you've probably asked yourself, how much does it actually cost to purchase a home? When you're considering buying a home, obviously cost is going to be a big factor. You have two separate costs that you have to consider. You have the monthly cost, which will be your payment ongoing, and you have your out-of-pocket one-time expenses, which would be things like your down payment and closing costs. So what I'd like to do is go ahead and start breaking some of that down and help you understand exactly what you're looking at in your home buying journey. So the first thing that you have to consider is obviously your monthly payment. Now, there's a couple of things that are going to go into that monthly payment that are going to help, that we want to help you understand so that you can be better prepared for purchasing your next home. Now, the first thing that's going to go into that monthly payment is your principal and interest. Your principal and interest is going to be the amount of money that you borrowed from the bank on top of how long you're going to take to pay it off. So 30 years, 15 years, 20 years, whatever you choose, plus your interest rate. Those three things are going to calculate your principal and interest payment. Now, most home buyers understand that concept, and so when they're using things like online mortgage calculators, that's the payment that you're going to most of the time see, even if you are guessing a little bit on your interest rate. What a lot of people don't know is that there's actually a couple of other things that go into your mortgage payment. You have insurance, you have taxes, and you have PMI. So your insurance costs are going to be the cost of insuring your home since you're taking a loan out with the bank. This is known as homeowners insurance, and you're going to get that through a third party. Oftentimes we provide a quote for our clients as a courtesy, and that's going to be part of your mortgage payment. It's also going to be part of your closing costs known as prepaids. So if you had a policy that was $1,200 a year, that's $100 a month that's going to be added into your mortgage payment. You're going to have taxes, property taxes as well. So the property that you're purchasing, there's going to be an amount of taxes that are owed based on the value of that property. It could be $1,000 a year, it could be $2,000 a year. It's going to be dependent on the amount of taxes that you owe. Many counties and parishes have the ability to go in and actually do an estimator to see what those taxes are. And for our clients who shop with us, we usually will do that for them. But it could be another $100 a month in taxes. And then to round it all off, you also will typically, unless you're putting 20% down or more, have private mortgage insurance or mortgage insurance premium depending on your loan program. And that can be $150 a month. So your principal and interest payment might be $700, $800, but then you've got another almost $400 between taxes, insurance, and PMI. And those things coupled together are what's going to equal your mortgage payment. So it's very important to consider those things whenever deciding to purchase a home, because things like older homes or homes in a flood zone can cost you more money a month because you're going to have flood insurance, or because maybe the home is older and so the insurance premium is more expensive. As far as your closing costs go, the things that you're going to have with closing costs are going to be any lender's fees. So you're going to be provided something called a loan estimate, or if you don't go under contract, you might be provided something like a fee worksheet, and it's going to highlight any fee that the lender that you're working with is charging you. Usually this is going to be in box A on a loan estimate, or one of the first fees you start seeing on a fee worksheet. Now, what's important to know is that not all lenders charge fees. At Bayou Mortgage, we 90% of the time don't charge any lender fees on any of our loans. So those types of things are negotiable. But you're also going to have additional fees. So you're going to have things like out-of-pocket expenses like getting a home inspection. In our area, that tends to run about $300 to $350. But if you're watching this and you're not in Southwest Louisiana, just check, you can double check and see what some of the inspectors in your area are charging. Those are going to be out-of-pocket expenses that aren't going to be part of your closing, but they are going to be part of the whole journey of you buying a home. You're also going to have an out-of-pocket expense for your appraisal. Now, the appraisal is the part where we hire an appraiser to go out and determine that the property is valued at the amount that you are purchasing it for. Those tend to run in the $500 range, and it's also a fee that's paid outside of your closing. Now, moving on to fees that would be included in your closing costs would be title company fees. So these are going to be the fees that the title company charges to make sure that the person selling the home can sell it, that there aren't any issues on the title that could cause you a big headache in the end, and also things like lender's title insurance and owner's title insurance. And what those do are they protect the lender in the event that there's some kind of a title issue, and it covers their legal fees and helps them get it settled. Owner's title insurance would protect you as the borrower from the same thing. So they're two separate policies. The owner's title insurance is optional, but highly recommended by us because of the amount of protection that you get, and it actually protects not just you, but any of your heirs in the future. So after your title fees, there's also going to be other various recording fees that will be charged by the government that are usually in the range of a couple of $100s. Once you move past that, you're going to move into what we call prepaids. Now, your prepaids are things like your homeowner's insurance that has to be paid for a year up front. Any flood insurance would be paid for a year up front, as well as any property taxes owed by you. Now, the interesting thing about the property tax is that the seller lives in the home until they sell it to you, whatever month and day that is. So they would be responsible for the first year up until that point, and you only have to bring the difference from that amount to the closing table. So this can, depending on your quotes, can be a couple of $1,000s typically is what we estimate for in your prepaids. So all of these things kind of work together to build up what ends up being your closing cost. And then of course, your final cost is your down payment. Now, there's a lot of information out there, and a lot of it's not true, about how much you actually need to put down on a home and what options you might have as a homeowner or as a future homeowner to be able to, put money down or have those costs offset. So we actually offer loans for zero down for people that are interested in moving in an area that would qualify for what's known as the Rural Development Loan Program through USDA. Also, veterans are going to qualify for zero down. For everyone else, you can buy a house with as little as 3.5% down with an FHA loan. So there are a lot of flexible opportunities to help you purchase a home that definitely don't require you to put 20% down, because that can be a big burden on you in waiting to be able to buy your next home. So consider all this information, but we just wanted to give you a good breakdown of what different costs you can expect when purchasing a home. And we always recommend that if you're working with a lender, you always ask them for a fee worksheet, or if you're already under contract on a home, that you get the loan estimate and you ask them if the interest rate is locked. If you do those things, you will be able to get a really good idea of what you're looking at spending and making sure that you don't get taken advantage of. So I'm Channing, and I'll talk to you next time.